Stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. It is our honor to support these great American heroes, and you can too by visiting dav5k.boston. Your gifts can support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information and to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Piece in the Wall Street Journal here from Nick Timmeros, and it is talking about Lyle Brainerd, who is the director of the White House National Economic Council. Previously, she had been on the Federal Reserve Open Market Committee for a number of years, I think, probably close to a decade, I would think. That she was a voting member
least,
there?
Yeah, somewhere in Obama's first. I don't recall. I know she's an academic. I believe she's taught at Harvard.
And I'll use the quote from her. Measures of supply chain pressures spiked and inflation followed them up. They have now returned to pre-pandemic levels, and we've seen inflation coming down closely behind that. So my anticipation is that we're going to continue to see progress on inflation coming down. And also talked about how pretty much the amount of investment that the federal government has made in domestic manufacturing is, in theory, going to help the inflation picture going forward.
She's brilliant. I wish she would expand on that thought. The favorable disinflation has had the opposite. The favorable supply shocks, I'll call them supply shocks, fancy way of saying something that hits the economy, sometimes often the global economy, and pushes up prices in the short term or pulls them down. They pushed up prices during COVID. Supply chains snarled up. Energy prices went up when Russia invaded Ukraine. Opposite effects have happened over the past 18 months. That's what we're talking about in the last segment. A lot of luck in the disinflation of the last 18 months. I wish she and others would explain why they think inflation will continue to come down. Nobody disagrees that the supply shocks have passed through the global economy like a pig through a python, for lack of a less disgusting
Does that happen often?
metaphor. We've all seen it. So.
We have, yeah.
So they've passed through, like a wave is maybe a nicer, you're on a boat, a wave pushes you up, it's a little unsettling, but it passes, and then you watch it as it hits the guy in back of you, and you snicker.
The wave, not the python.
No, I've moved on to a nautical
The
analogy.
python's not swimming and causing the wave.
No, I'm not mixing them. Yeah,
just making
there's
sure.
There's a gigantic python. Yeah, boy.
We all saw the movie Anaconda.
Terrible. Yeah, right, yeah. Unfortunately, we have all seen that.
Gave me nightmares for a
while. Yeah. So I wish she would expand on why she and others seem to think inflation will continue to come down. Are there more favorable supply shocks in store? Or is Fed policy, I think this is what she means, it's now sufficiently restrictive to break the real economy? If that's her belief, I don't know, man. We grew it above trend last year, and unemployment's still below 4%. Where's the rest of the disinflation going to come from?
And the other piece on this that I question, and I'll quote here, this is Nick Timmerhouse's writing, not Brainerd's speech. Efforts to boost spending on infrastructure and computer chips, together with the surge in people returning to the workforce and business formation, have made it easier for the economy to bring inflation down without a big decline in economic activity, President Biden's top economic advisor said in an interview.
Okay.
The piece that I struggle with here is we talk an awful lot about how there are three components that are not necessarily required, but typically, make up, any rise in inflation. You get supply shocks, as you outlined, demand shocks where, hey, there's an influx of demand for some reason, and then inflation expectations. The demand side of the equation, it's really difficult for me to say that is in order when you're running 6% plus deficits on a regular basis now, because that creates an awful lot of demand. Even though it's not necessarily coming from higher wages, it still is making its way into the economy. And if that is present as kind of background noise, as I'll describe it, then if you do get any kind of supply shock that does come through, right there you've got a couple of those components that are already hitting because the demand piece is already in place.
Yeah,
and even though inflation expectations have improved over the last 12 months, they're still not quite where you'd like to see them in order to get them back to pre-pandemic levels.
This is what happened in the 70s. Inflation went up, like those waves I described, and came down twice in 73 to 75, the first OPEC shock. And then again in the late 70s, the second OPEC shock and the Iran revolution. But underlying inflation never really came down enough because demand was higher than the economy's, I'll just call it speed limit. Because policy, I think this is the consensus view. Some would disagree, but it's mostly harmless. Because policymakers never recognized the speed limit was a lot lower than they thought it was. They had both bad data and they were mismeasuring the potential output of the economy or the natural rate of unemployment, if you like. Those are two sides of the same coin. I wonder if we aren't falling into a similar trap today.
Let me ask you a question, just because I had another thought just when looking at the language that you used here. So my anticipation is that we're going to see continue to see progress on inflation coming down. When you look at any of the research that's been done on inflation expectations, how much of it is tied to current prices versus, I guess what I'm getting at, is she trying to message inflation expectations
That's part of their job.
lower?
Absolutely, yes. Yes.
And in doing so, I'm not saying that this is good or bad. I'm just saying that it is. But if you want to message inflation expectations lower, isn't the best way to do that is to be kind of bendy with the truth? I'm not saying that I like this or not, but if I'm in a position where I'm trying to get people to have lower inflation expectations, the best thing I can say is based in reality, but also, extending it a little bit, which is what she's doing. I'm not saying this is right or wrong. I'm just saying it is.
The mamby-pamby, half measures, nice mommy or daddy, good cop, bad cop, whatever this approach is, I prefer they just go on TV and chew glass for a half hour so that you say, oh my God, this person is out of their mind. They're going to do whatever they need to do to crush inflation. I don't think we're safe. That's the approach you need. People were afraid of Paul Volcker. Construction workers were mailing him 2x4s. Farmers were mailing him. It was an ugly time to be a Fed policymaker.
Why were they mailing him a 2x4 if that would be more expensive later on?
Because they couldn't. Yeah, it wasn't. It was very.
They might need that on a building.
Kind of stupid. Yeah, right.
You might need that.
I guess the point was they didn't think they were going to need it. So here you go, Mr. Chairman. If you don't lower rates, we're never going to use these studs to frame up a house. I guess that was the point they were trying to make. Yeah, it's kind of a subtle message.
Did he mail them back?
I'm not sure what he did with all the wood they sent him.
Maybe he built his own house. Maybe that was how he escaped inflation personally.
Because people were sending him useful stuff.
He's like, I got a head of lettuce.
If you want to be tough, just act tough, right?
I agree. My big problem with leadership surrounding anything related to inflation the last few years is that they haven't scared markets enough. And I think you need to occasionally.
Yes.
Let's take a quick break here. When we return, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699 or request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in mixed territory as Wall Street reacts to retail sales from January released this morning, which showed a pullback of 0.8%, worse than estimates of a 0.3% decrease. Right now, the Dow is up by over 1/3% or 143 points. S&P 500 inching 3 points higher, and the NASDAQ off by just over 1/4%. Russell 2000 jumping today 1.5%. 10-year Treasury yield down by 4 basis points at 4.22%. And crude oil is up by 1% today, trading at $77.49 a barrel. Shares in Cisco down by 2%. After the tech company posted a yearly decline in revenue during its fiscal second quarter and also provided weaker than expected guidance for its fiscal third quarter. On top of that, Cisco announced a downsizing initiative that would result in a cut of 5% of its workforce, or about 4,200 jobs. Meanwhile, consumer engagement company Twilio provided lower than expected revenue guidance for the current quarter, sending its stock down over 13%. The company also reported total active consumers for the fourth quarter that fell short of street forecasts. Elsewhere, Deere down by 4.5% after the farming machinery company lowered its full-year net income guidance. The company did, however, beat expectations on the top and bottom lines in its first quarter results. Warren Buffett's Berkshire Hathaway trimmed its massive stake in Apple, selling about 1% of its shares in the fourth quarter, bringing its total stake in the tech giant to about 5.9%, or about $167 billion. Apple shares down by 1%. Berkshire Hathaway also sold about a third of its stake in Paramount Global. That stock down by 2.5%. And Shake Shack is jumping by 20% following a strong fourth quarter earnings and a solid 2024 outlook. I'm Tucker Silva, and that's Wall Street Watch.
Mark, I want to talk about this piece that was in the Wall Street Journal this morning. It's regarding a company by the name of Arbor Realty Trust, and probably not one that is, right on the tip of everyone's tongue out there.
I don't think I'd heard of them. It's
a $2.5 billion company based out of New York, as finance companies tend to be, and I'll just quote from their investment profile. They are a specialized real estate finance company. They invest in a diversified portfolio of structured finance assets in the multifamily and commercial real estate markets, primarily consisting of bridge and mezzanine loans, including junior participating interest in first mortgages, preferred and direct equity. So they're a real estate finance company. It's what they do, and specifically, they lent money to companies that wanted to buy apartment buildings. That was, kind of the bulk of their business. And a lot of it was focused on the southeastern part of the United States. And according to data company CredIQ, who I'm not familiar with, but they're cited by this piece, borrowers of around 9% of that debt that they lent out are now delinquent by at least 30 or more days. As a point of comparison, at the start of 2023, fewer than 1% of their borrowers were delinquent. So this is not ideal. If just as an example, I don't know what the rates are that they lent out money at to these apartment buyers, who would then, again, if you're an apartment buyer, your idea is, okay, I'm buying an apartment, I borrow money, and then I, lease out the units. That's what we're talking about here. I'm assuming that the rates on these loans are probably somewhere in the ballpark of 6 to 10%. I'm just basing that on the fact that it's still a real estate loan. It's some kind of commercial real estate loan, likely made in the last couple of years. We're probably in that ballpark, depending on the credit quality of the borrower. I could be right, I could be wrong. But here's what I know. If you are a lender, and let's say that your average loan rate is 8%, and now you've got 9% of your loans defaulting, the math does not add up to you being able to be profitable in that situation.
No, it doesn't. And in some sense, I guess this was inevitable. And it's being reflected in equity prices. We've made this point before on the financial exchange. Stocks, because they're traded every fraction of a second, will reflect market's best guesses, investors' best guesses as to who will bear the brunt of the pain of rising interest rates in this segment of the market that we're talking about right now, or any other segment, as opposed to property values, which are adjusted very sluggishly. It's just the nature of the type of accounting they do in less liquid or private markets. Real estate shares, in a relative sense, are kind of getting hammered this year. Public real estate trusts, this particular company's not included among them. So I'm using this as somewhat of a proxy, down several percentage points while the market is up several percentage points. So investors are kind of weighing in on this. It is a point of concern. It was probably inevitable. How far does it go? I guess depends on, to an extent, our earlier conversation about whether or not rates have further to rise and whether or not the economy is likely to slow as a result. Look, conditions ain't going to get any better. Probably in the foreseeable future, unless if a recession causes the Fed to lower rates, is what I mean. Providing there was some relief on interest payments, assuming some of these things are adjusted relatively frequently, that will be accompanied by tenants who aren't paying their rent, so their cash flows will be affected adversely. It's probably a no-win situation for companies like this over the next couple of years as things work themselves out.
I think the other piece when looking at this and kind of talking about something that you mentioned there, which is, hey, look, if the Fed ends up cutting interest rates, like, great, this can kind of sort itself out a little bit, but the only way that the Fed likely cuts to that magnitude is in a recession, which means that it's not really getting sorted out without any damage. There's significant collateral damage that happens economically.
Out of the frying pan into the fire.
Exactly. So I'm looking at where we stand right now, and I know there's still all of this push to say, hey, the Fed needs to start cutting rates sooner, and I find it kind of surprising that we're still getting that after the inflation reading that we got yesterday. 2 days ago? When was it? 2 days ago? Yeah, on Tuesday.
Yeah.
I'm just... If you get a report like that, I'm not saying that it means inflation is going to have this resurgence, but your messaging at the very least needs to be, we got to wait to see what happens next month at least.
I think the most vocal proponents of an immediate cut or easing at the next meeting and then continued easing, they tend to be left of center. You just have to recognize your own biases. They would accept a little more inflation in exchange for slightly lower unemployment. This has been a trade-off from time immemorial. This is not a new argument. People who are left of center politically tend to be easy money people, and right of center people tend to be tighter money people. I would prefer lower inflation. I would even love to experiment with 0% inflation. There are good arguments against it, but there are some arguments for it. Inflation creates a lot of inefficiencies. Anyway, that would be a tangent.
Can we go down that tangent for a little bit?
Sure.
I think this is actually a great... What is the argument for not targeting 0% inflation?
For some positive rate of inflation.
What's the case? Because the one that I'm familiar with is... It's almost the inverse to the reason why you don't want to maintain 4% inflation, which is, hey, if you've got higher levels of inflation, it's a lot easier for a quick spike to all of a sudden push it to a place that's really uncomfortable, like 6 or 7% inflation if you're targeting higher. Likewise, if you're targeting 0, the argument that I've heard is, well, gee, if some kind of economic calamity hits, now you're in a deflationary environment, which makes people more reticent, more hesitant to spend money now because things are cheaper in the future. And that in turn slows the economy further, and you get this deflationary death spiral of the economy as opposed to the inflationary one.
There are two big arguments. One of them you've already hinted at against a 0% inflation target. So prices are stable from year to year in a 0% inflation regime. One is, and you've already sort of hinted at it, if the Fed needs to cut rates, it can only cut them to 0. If inflation is running at a positive 3 or 4%, the Fed funds rate can go to negative 3 or 4 if inflation's running at 3 or 4. So that's one policy argument against it. The other is that a little bit of inflation greases the wheels of the labor market. And by that I mean, if inflation's running at 4%, you can give somebody 2%. They'll be happy with a raise. They're actually getting a 2% cut, though, in real terms, because prices are growing at 4%.
So they're not really that happy. Like
we don't realize it. People are fooled by inflation. Money illusion.
I disagree. We saw this in the last year, just as an example.
No, I know.
We saw people that lost purchasing power, and they weren't happy.
Yeah, but they're happier. Look, they'll take 3% over a smaller amount. At least the research done through my knowledge base here might be a little dated, as am I at this point, probably past my shelf life. Kidding, probably not. But anyway, my perspective might be, I acknowledge this, but I don't think there have been any breakthroughs in research in the past 20 years since many of these findings became sort of canonical and accepted within the profession. People will take a nominal increase and be satisfied with that. You can never cut somebody's salary, though.
No, exactly.
So if you need to keep, for full employment purposes, if you had to start cutting salaries and people resisted, the only alternative is laying them off. But with inflation, you can keep people employed, give them real reductions in salary, which we don't recognize because we fall prey to money illusion, and keep employment higher. I'm sorry, I didn't say that very well.
No, but
those are the two.
And maybe
arguments.
2022 was kind of the outlier because of how high inflation was. But
yeah,
I think
can we forget
it's much more, hey, if inflation's running at 2.5 and you give someone a 2% raise, they feel fine.
But they'll never take a wage cut.
Correct.
Inflation is a way to cut wages without people knowing it, and it keeps employment higher than it otherwise would be.
Because we have an ego. Our ego does not
Very
let us
resistant
say,
to wage cuts.
If you're making $15 an
I didn't
hour
explain that
doing whatever, and your boss comes to you and says, Chuck, you've done a great job this year. Going to cut your wage to $14 an hour just because we're just trying to cut
we had
costs.
deflation, or the economy deflated 5%.
It's not about you. Prices are down, and so we're just cutting your wage. You'd still be like, hell no, you're not paying me less for the same work I did. I'm out of here.
Understandably.
Because we have an ego, whereas
we anchor to our. You're right.
You can do that with an inanimate object that's part of your business. Hey, the cost of lumber came down. Does the 2x4 care that I paid less for it? No, it's dead. It doesn't care. A human, on the other hand, Chuck, great job this year. Here's a 5% pay cut. Well, why? Costs are down, and you have more purchasing power right now. We're just
take this like a 2x4, Chuck, and just be phlegmatic about it.
I've often been described as the
2x4.
2x4 of humanity, and it's the greatest compliment that anyone's ever
I agree. I'd love to
given
be called
me.
a wall stud.
Let's take a quick break here, and when we come back, what do I want to touch on here? Let's talk about Boston and the problems with the office market spilling into problems with the tax base right after this.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free, and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. If you've had a successful career and want to make sure you protect your assets, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home, and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
And here's the premise of it. I'll lay it out very simply here. Tumbling market values for office buildings are poised to cut Boston tax revenue by more than $1 billion over the next 5 years as the pitfalls of the pandemic and hybrid work continue to reverberate throughout city budgets. That's according to a new analysis published Thursday from Tufts University's Center for State Policy Analysis and the nonprofit Boston Policy Institute. They're based in part on a McKinsey estimate that office values will drop by 30% or more through the end of the decade. And if you look at where the city of Boston gets the bulk of its tax revenue from, it's very heavy in commercial property taxes compared to other cities of similar size. And so, just as an example, here's why this happens here. Commercial properties in Boston are taxed at a rate of 2.5% compared to around 1.1% for residences. So, this is great when you have a whole lot of construction and full buildings and property values are going up on commercial real estate. When they're not, you end up with a gap that you need to fill somehow, and this gap is painfully relevant on a day like today. Where did either of you see what was going on with the MBUTA?
Oh, yeah.
The MBTA, if you will?
There's power outages all over the place.
No.
Haymarket Station, completely dark.
Pitch black.
Pitch black. There were 3 lines. The only one that was unscathed today was the
Red line?
Red line, I believe.
Believe so.
And other than that, all 3 other lines were shut down completely for quite a while, at least like an hour or so.
Green, blue, and orange lines had a power problem.
Are these failures, is the incidence of these failures, some of them seem trivial. You know, a door almost shut on somebody, and it's Channel 7's top story. I'm not picking on 7. Anybody would run it. Is the incidence of these, I'll just call them failures, is it greater than public transportation entities experience elsewhere in the country?
Well,
because I have no reference point.
Here's what from what I've seen, it's in line with the worst public transportation systems in the country. Just as an example, if you look at Washington, D.C. and their metro, they had a really big problem with fires several years ago, back in 2016. And in fact, what they were seeing, just to give you an idea of how bad it got, they were having fires at one point every 3.5 hours on the metro, which was bad. They shut the entire system down.
At least they were regular
month.
Intervals.
Well, it was.
I'm kidding.
They were. Sorry, not 3.5 every 3.5 hours. It was 3.5 fires a week. I completely misspoke there. But that was, still one every 2 days. That's kind of a problem. The T has not been that bad in terms of fire and things along those lines, but in terms of reliability and slow zones and things like that, it's as bad as any system in the country. Does it mean that, every little thing should be reported on? No, but when, 3 out of your 4 major lines lose power for an hour of a morning commute.
Well, I'm not questioning the media's coverage to say, well, I guess I kind of am.
Not ideal.
Sensationalizing little things.
And the question is, where does the money come from?
Is this systemic?
To fill it then?
Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to visitusvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands is everything you need to enjoy the vacation of a lifetime. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Did you guys see that we're going back to the moon?
Yeah. Well, what was like the original, or 72 or something like that, or aircraft, or I don't know.
What?
I saw headlines on. It was like they're using
Great summary, thanks, Doug.
similar rocket or something in 72. I don't know.
Intuitive Machines.
I saw that.
They launched on a SpaceX rocket, and they have a moon lander that is heading to the moon. I'm going to be very critical of the CNBC writer who wrote this, who said the cargo lunar lander is loaded with research. It's not loaded with research. It's loaded with research equipment and instruments, not research.
Not like papers.
We didn't send a bunch of papers to the moon.
Because I want to put one on there for posterity.
I bet you would.
Oh, it's the first moon landings in 72.
Quick break here. Hour number 2 is coming up in a bit.
Dummy.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic, and you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things. In particular, if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, it comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to 0. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to 0 due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org, CancerSupportMass.org.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you here a little bit after 11 a.m. on Valentine's Day +1, as I like to refer to it. It's just the second day of expressing your love for your significant other.
You should do that every day, Chuck.
We should do that every day. And we got the Dow up 156 points today. The S&P is up 2. NASDAQ is down 61. So mixed markets at the moment, but not the way we've seen for the last year, kind of inverted. And this largely has to do with the fact that we've got Google down about 3%, Amazon's down 1%, Apple's down 1%, Nvidia's down 2/3, Microsoft. Basically, the Magnificent Seven are hurting today. And I don't know why, but they are. I have no conclusive evidence anyway as to why this is the case. 10-year U.S. Treasury is down 2.5 basis points to 4.24%. Oil, West Texas Intermediate, up $1.05 a barrel to $77.69. AAA national average for gas prices continuing to tick up another $2 cents overnight to $3.27. So you're continuing to see gas prices rising as we go through the winter here. We've got gold up $8.40 an ounce to $2,012.70. And that is what is going on in markets. Even with fewer rate cuts, you should still buy bonds is the headline from the Wall Street Journal, which is one of the most irresponsible headlines I have ever seen. I didn't realize that the Wall Street Journal headline writers were in the business of dispensing financial advice.
Well, they could have, with one word change, this headline wouldn't be as problematic. Instead of buy, how about own? If you're an investor for whom diversification might be beneficial. I'm not saying that should all be in the headline. That maybe there's a sub-headline in there. But most investors might want to own some bonds.
Well, let's talk a little bit about
not saying it's a good time to buy.
The thesis here. And the premise here right now is that long-term bonds, the 10-year Treasury, just as an example that they use here, is still floating north of 4%. They note that the long-term Fed fund rate projections at the high range are 3.75%, and that the long-term Fed fund rate projections at the low range are about 2.5%. And basically the argument here is, hey, interest rates right now are higher than the Fed is projecting for the long term, so you should go buy bonds. That's the argument that this Wall Street Journal piece makes. It leaves out a very key problematic point, which is that there's no guarantee that those Federal Reserve projections are right. Case in point, if you go back, 8-9 years, Fed was talking an awful lot about how it always wanted to normalize interest rates. It wanted, to have, Fed funds rate back in that, 2 to 3% range. Well, they never could get there. They pretty much they kind of almost got there once at the end of 2018 or 2019, and even before COVID, you had signs that the economy might be starting to see some slowdowns, and they stopped raising rates and were talking about cutting rates and things like that. And so the idea that Federal Reserve interest rate projections should be informing whether or not you should be buying bonds at this point in time I don't know that that's really good.
Yeah, there are tons of problems with it. It's so faulty that it would take hours to pick apart. I mean, it's amateur hour. Honestly, it's investment amateur hour. No offense. I don't claim to be the foremost investment professional in the world, but anybody with a little bit of experience and training knows that trying to time interest rates based on any public, widely disseminated and known measure is probably folly. I mean, what you could say, and this would be responsible and uncontroversial, I think, is that in many periods of stock market turmoil, bonds have provided ballast. They've provided insurance. And you can look at the performance of the Bloomberg Ag, which is an aggregate, which is an index of most but not all publicly traded bonds in the United States. And you can look at how it performed when the tech bubble burst or during the financial crisis of 2008. And I'm not going to get into comparing performance numbers because bonds significantly outperformed. They were positive. Not significantly so, because you wouldn't expect that from an instrument with a fixed upside, but they provided positive returns when stocks provided negative returns, and that's why most long-term investors own bonds.
I want to read one other paragraph here. Just, again, pieces like this I find very bothersome. For bonds, though, expectations of monetary policy matter a lot more than stocks. Investors have been unrealistic. Only 2 weeks ago, they were convinced that the Federal Reserve would start lowering borrowing costs in March and priced in a 66% chance that there would be 6.25 percentage point cuts by the end of the year, according to analysis of derivatives contracts from the CME Group. Officials pushed back against market optimism in vain. The inflation data has finally brought home the point, and derivative markets now show just a 35% chance that borrowing costs will be 4.5% or higher by year-end, implying 4 rate cuts or fewer. This is not making the point that I think it intends to, but the point that I think we should take from this is that even investors who look at the bond market on a regular basis and actually put money into bond derivative contracts. Like, you don't get there by accident. You don't just press the wrong button on your E-Trade account and invest in, short-term interest rate futures. It's kind of hard to get there. You have to do some legwork to do this stuff. Those people are wrong all the time on this. I mean, 2 years ago in 2022, the Fed funds futures market was pricing in 1% in rate hikes for the year. We got more than 4% by the time it was done. Last year, the market was pricing in rate cuts starting in June. Mark, pop quiz, how many rate cuts did we get last year?
I want to say 0, Chuck.
The answer is 0. These markets are not right. And it's not just that the markets aren't right. It's that the Federal Reserve, which often offers guidance to these markets, is also not always right. And so
it's just
when we look at this, and we can actually pull this because the Fed keeps their meeting calendars, they keep their meeting schedule out there. If we go back to the beginning of 2022, and you look at the summary of economic projections that showed where the Federal Reserve thought interest rates would be at any particular point in time that they cover here, for 2023, they thought, for 2022, let's do this. For 2022, they thought that the federal funds rate would be 1.9% by the end of the year. It ended up being north of 4%. The Federal Reserve's own projections were wrong. And yet this piece, this horrible, horrible piece, says you should use the Federal Reserve's interest rate projections in informing your decision on whether or not right now is a good time to buy bonds, despite the fact that there are no facts and evidence that forecasting from the Federal Reserve is accurate.
Who buys bonds for capital appreciation anyway? I mean, maybe some people do.
Bill Gross used to.
Well, that's his. Other than an active bond manager who tries to outperform a broad market index.
Yeah.
Who buys bonds for capital appreciation? Most of you that own them for diversification. They're a form of insurance during periods of stock market
or for
turbulence or for income.
Yeah.
You clip the coupons.
And so this piece I find very, very troubling.
It's not written by someone who's ever worked with investors or probably in finance.
No, it really
just
isn't.
Most of their pieces aren't. I mean, they're journalists, of course. They're English majors.
it's just bothersome here. And
journalism majors, excuse me.
There is a paragraph where it says, to be sure, the Fed could be wrong. More activist fiscal policy, a partial reversal of globalization, or blah, 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 could, cause rates to remain higher.
Look, Chuck, these people have to write imagine having to write every single day about something complex and slow-moving and trying to make a story out of nothing. They have a very hard daily newspaper, the daily newspaper business, other than reporting local news and obviously national news. In finance, there's usually not a lot to say day to day.
No, but
on macro stuff anyway.
I always, whenever someone, says, oh, like this, this people in this industry have it hard, I always come back to The Godfather. This is the business we have chosen. If you don't want to have the struggle of trying to write about investing every day, don't go work for the Wall Street Journal. And if you do go work for the Wall Street Journal, do better than this. Because this is the business you've chosen. Like, every job has things that people don't like about it. Every job has things where you say, oh, gee, I can't believe I have to do that. The people who are great at those jobs, they overcome that in some way.
Yeah, they killed Hyman Roth, right? That was Hyman Roth who said that, I believe, and that was Godfather. I was trying to remember the context. Hyman Roth said that when Michael was going to pull out of the deal, right? Of course, I should know this, being Italian-American. Yeah, Michael was going to pull out of funding the casino in Havana.
Yes.
Yep. So Hyman Roth
yes, it was.
And Hyman Roth ended up dead.
Yeah.
Next couple seats.
Yeah.
I'm not sure where I'm going with that other than that context is important. He ended up dead a couple scenes later.
But that was the business he's chosen.
Yeah, so in a way it was like foreshadowing.
Like that was the whole, like that's the whole meat of it there is like, hey, that's the consequence of what you've decided to do with your life. Likewise, if you become a writer for the Wall Street Journal, hey, you have to write every day. That's the consequence of that choice, and this piece is just... I get upset at these things because someone out there is going to read this and make an investment decision based on it. And that bothers me. Because I don't think it's a well...
You think so? You think people use the Wall Street Journal for that? Am I being naive? Do they use it as a guide to making investment decisions?
There are a lot of people that read something in the Wall Street Journal or see it on CNBC and think that they have an edge because they're seeing it, not realizing that basically all these places operate with like a 2 to 3 week delay from when the actual action has already happened. Let's take a quick break. When we come back, we're going to be joined by Kelly O'Grady from Fox Business right after this.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John. And enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
As promised, we're now joined by Kelly O'Grady from Fox Business here to talk a little bit about what's going on in markets. Kelly, how are you today?
I'm great. Thank you so much for having me on. I'm a Boston girl originally, so I'm excited to chat with you.
There you go. Off to a great start. Kelly, let's talk a little bit about what we've seen this week. A couple days ago, we get a hotter than anticipated CPI report. Markets fall apart for all of a day and then seemingly kind of proceed on like nothing ever happened. What do you make of what we've seen so far this week?
So we've seen this happen multiple times, right? The volatility that we're seeing in the market, I think, can be really confusing because on the one hand, we've had the market going like gangbusters this entire year, a lot of last year. And of course, there are a lot of economic indicators that are saying, okay, maybe we shouldn't be super excited. The way that I look at this is there was this initial reaction to the CPI coming in hotter than expected. The market, if you go back to even early January, had been pricing in a potential for 7 rate cuts from the Fed. Now, that has gone down to, I believe, between 3 or 4 last time I checked. And so you have that initial sort of gut reaction of investors going, well, we've been banking on rate cuts. Oh gosh, CPI is higher than we expected. Maybe now we're not going to get a rate cut until June or August. And you see that sell off. You see that profit taking because people are saying, okay, the Mag 7 has been going like gangbusters. We need to take some of those profits that we've gained. And then you see things level off, right? We got some retail sales data today that kind of gives an indication that the consumer is not as strong as expected. And those are things that the Fed actually does want to see when you think about what's going to go into that decision around rate cuts. It fell 0.8%, those retail sales numbers. That was more than expected. So I think you see that gut reaction from investors, but no one said that this road back to the inflation rate that the Fed is looking for was going to be smooth. There are going to be bumps in the road. And I think what you saw with the CPI and the reaction in the market was one of them.
And Kelly, we've talked about this a little bit on our show, but if you look at the 3-month average of core CPI, it pretty much bottomed in the middle of last summer and then has kind of been steadily rising over the last 6 to 7 months now. And that's something that I think indicates that, hey, the Fed might still have more work to do. But ultimately, we've kind of said, look, there does have to be some pain in markets one way or another. Why are we still seeing that this is just, okay, like I know we got this retail sales report here, but why are markets still shrugging off this idea that inflation might not be vanquished? I know that, yes, they've pushed the cuts out a little bit, but why do they still think there might be cuts at all this year, given that we still have not seen the progress needed in the areas that the Fed talks about wanting to see it in?
So I'm going to react to a couple of things that you said. I love that you brought up the core number because that is worrying me a lot, right? I mean, a lot of the down, and I shouldn't say decrease in inflation. It's a decrease in the inflation rate, right? Because
Yes.
prices are still rising. But a lot of that decrease has been because energy prices have come down.
Mm-hmm.
It's not because shelter prices are coming down. I mean, I just signed a lease on an apartment. I can tell you they certainly haven't. It is so that core, that's the Fed's metric for inflation that they look at primarily when they're making these decisions. And it shows that inflation is stickier than they were hoping. And so that is one piece that I think a lot of folks are worried because energy prices, right? We know that they can fluctuate very, very, very quickly, and especially with everything that's going on in the Middle East. That's something that could make that inflation rate spike back up as we go towards the summer, potentially, right? Everyone's using a lot more gas, et cetera.
Sure.
Now, the question about, okay, well, why are you not seeing that manifest in the markets? And there's two reasons, I think. One is we are in an election year. I think the Fed is very motivated to cut at least once this year. I do think it's probably going to be more, but I think they've taken some victory laps, potentially prematurely. I am curious, to hear Powell's next remarks in terms of, what we're seeing, what the outlook is there. But I do think they want to make a rate cut. The other thing, by the way, in an election year, markets always outperform. Go back, look at the data. It's always an up year in an election year historically. It's the year after where the trend shows that the markets actually take a hit. So that's kind of one piece. The other thing is I do believe we are going to have a strong earnings season next quarter. I would say this earnings season was mixed, right? You had a lot of the
Sure.
Max 7 showing really, good improvements, a lot of investment in AI. Of course, you say AI and investors go crazy. But I think that the messaging, the negative messaging, the revising down their forecasts, it's a fun little trick companies used to use. I used to work at Disney. I used to prepare their financials. We would always message when there was going to be a downturn in earnings because you want to get ahead of that. And I kind of think we're going to see the beauty of low expectations. So
Sure.
you see these companies revising down their estimates. They are likely going to hit them or outperform those, even if they are lower than what they originally were.
Kelly,
let's say
we've got to run. I apologize. We're up against a hard break, but thanks so much for joining.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Let's do a little bit of trivia here on the Financial Exchange. It's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited. Dine-in only. Well, today, February 15th, would have marked Chris Farley's 60th birthday. However, as we all sadly know, the comedy legend sadly died back in 1997 at the age of 33 due to a drug overdose. Trivia question today: which current actor and former SNL writer wrote the popular SNL sketch Matt Foley, Motivational Speaker, played by Farley? Once again, which current actor and former SNL writer wrote the popular SNL sketch Matt Foley, Motivational Speaker, played by Chris Farley? Be the fifth person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on tomorrow's show. 617-362-1385. And the fifth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
There's a little company by the name of NVIDIA that yesterday overtook Alphabet in terms of its market capitalization just a day after surpassing Amazon. And so it has now become the world's fourth most valuable company behind Saudi Aramco, Microsoft, and another little company by the name of Apple, or Apple as it's more commonly referred to. The fascinating piece with NVIDIA is we don't know whether or not, I guess the proper grammatical term is just, we don't know whether they are going to actually have any long-term sustainable advantage in this space.
Other than that.
And I had an interesting thought bubble up when I saw this news yesterday. And the interesting thought is, what if NVIDIA is just this generation's Intel? And I want to hop into the Wayback Machine and do and do a little bit of time travel here. And I want to take us back to late 2000. And I want us to, again, really remember what it was like to be at that point in time. And in NVIDIA,
I wish.
In 2000, and specifically, I think it peaked in July of 2000. If we look at where it was, in 1995, and this is in split adjusted terms, Intel stock was trading around $4 a share at the beginning of the year. By the time we got to April, May of 2000, it was up to 71. And so in percentage terms, just over that 5-year period from, the start of 1995 through mid-2000, Intel stock was up 1,500% in a span of 5 years. It was remarkable. Actually, 1,700 at its peak. It was just a remarkable surge that we saw. And if we look today, just at NVIDIA instead, and say, okay, let's take a look at them and look at their last 5 years. Well, NVIDIA stock is up about 1,700% in the last 5 years. It's almost a mirror image of Intel, and it's not to say that they're going to follow the exact same path, because I'm not big for the exact path analogs of this one trades that, but the last 5 years that NVIDIA has gone through looked an awful lot like what Intel went through in the late 90s. And Intel, when you look at how it performed afterwards, it's not that they didn't have the best chips on the market or what. I mean, Intel dominated the personal computing space for the next 20 years. AMD was basically a competitor they kept around just to avoid claims of antitrust.
Yeah, I wasn't trying to be silly when I said they wish. Every company would like to know with assurance that they'll be in business in 20 years. The executives at Intel are still getting rich, even though the stock's gone nowhere.
Well, and this is where I'm going with this, is Intel has a hugely profitable business. Not so much the last year or two where they've been dealing with some stuff, but if you look at Intel's business over any extended period of time, I mean, they were basically printing $10 to $20 billion in profit a year for 2006 through 2022. It was just a cash cow. So with NVIDIA, or rather, let me finish the Intel story. So Intel gets to $71 a share back in early 2000. It's literally never gotten back there. And, the stock price ended up falling around 75-80% from its peak, and it got close. It got back up to, $64-65 a share in 2021, I think it was. But it's never gotten back to that peak. And so the question with NVIDIA, and I don't have any answers because I don't know the tech well enough. I'm not professing to be some kind of expert in what they do or what they don't do. But the question is, okay, all these people are piling into NVIDIA because of how it's done the last 5 years now. There's a clear comparison right in the chip-making sector from 20 years ago, different market segment. It was the PC segment instead of, AI. But what makes us think that NVIDIA is different from Intel 20 years ago? And I don't have a good answer for it.
They make computer chips. Intel makes computer chips. We do, and so what should be their valuation? At what level should their stock be relative to price, relative to earnings? Relative to sales, relative to how should they be valued relative to other chip makers? To some extent, it's uncharted waters because of the vast potential and peril associated with the AI. We just don't know. And I suppose you could also make an argument that they shouldn't be valued in the long run at a multiple any greater or lower than any other chip maker. As you've indicated, we just don't know. And
Intel, by the way, it's not like their business ever fell apart.
No, we said they're a wonderful company. That's why I said they wish they were Intel.
Intel had 30 to 40% operating margins for the last 2 decades.
I shouldn't say wonderful. I really don't know. But my point is they're still in business and it's thriving.
Right. We look at NVIDIA right now. They got 45% operating margins. That's great. Intel did that, 35, 40% operating margins for the last 2 decades. Still didn't mean that they became the first, $1 trillion, $2 trillion, or $3 trillion stock. They didn't. NVIDIA can be a great company without being a great stock.
Sure.
Over the next 2 decades.
Lots of examples of that. Jeez. Yeah. Sure.
And I think that the extrapolation that's being done here is really feeding into, I've talked about this a lot the last couple of weeks, this feeling that we are entering this max stupid phase of whatever it is that we're going through.
In some ways, it does. The one parallel that's missing is in the late 90s and 2000s, the benefits were tangible. They were on everybody's work. They were on everybody's desk. We were getting computer upgrades every 18 months, cell phone upgrades at about the same frequency. We went from telephone-based in-house internet to fiber optic-based. It seemed like overnight there were real concrete improvements, not only in how you did your job, but how you did a lot of things during that period. So it granted, it didn't show up in the productivity numbers for a while, but we now know a productivity explosion during that period as well. And yet markets still got way ahead of themselves. You see nothing like the pervasiveness of technology in the 90s. You don't see that, at least in the workplace. I'm not talking about smartphones and the Oculus headset and whatnot. But it's not as pervasive as it was then. It was much easier to get caught up in it then because it did change your life.
Let's take a quick break here. When we come back, we'll do a little bit of stack roulette.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic, and you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things. In particular, if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, it comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia question today was, which current actor and former SNL writer wrote the popular SNL sketch Matt Foley, motivational speaker played by Chris Farley? That would be Bob Odenkirk, the Better Call Saul star, served as writer on Saturday Night Live from 1987 to 1991. Before the character Matt Foley's TV debut, however, Farley regularly played Foley in Second City sketches in Chicago opposite of Odenkirk, who called the performances with Farley the most fun he's had in show business. Winner today of the Financial Exchange Show t-shirt was Joe from North Chelmsford, Mass. And Joe's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only.
Mark, what do you got for me for Stack
Chuck,
Roulette today?
I looked exhaustively in all the major places I have bookmarked on my web browser. I couldn't find anything interesting. So can I ask a question? Can we talk about AI again for a second?
Yeah, we can talk about AI for more in a second.
This is whoever wants to answer it, preferably both of you, or ideally not neither of you. Have you seen, I mentioned that in the 90s, the benefits of the telecom tech revolution that were taking place, they were tangible, they were concrete. you had internet access at home, and then you had fiber optic access in the very late 90s. Computers were routinely upgraded every 18 months for both work and personal use.
Yeah.
Dot matrix became inkjet, became laser printers. Everybody had a scanner at home. These things were getting much more powerful and much cheaper. Anybody who lived through it knows
Digital
it was,
cameras.
Digital cameras. They're so lame now, and they stink. But it was
Well, no, the high-end ones are
It was
fantastic.
revolutionary.
Like
No,
the
I'm
actual-
sorry. What we had then seemed so
yeah.
lame. Like the first camera on the phone was a very big deal. You know, it was heavily pixelated, black and white, but it was still pretty cool. Where do you see, and this could just be that I'm a shut-in and I don't see it, so please let me know, where do you see the benefits of AI starting to make their way into, never mind permeate, but just starting to make their way into everyday either work or personal lives? Do you see evidence of the AI revolution yet?
No.
What am I missing? Okay.
No.
Non-existent, right?
I think for businesses, there are absolutely use cases for it right now, and lots of them. I think for the average person just saying, hey, how does this improve my life? I'm not sure there's any there right now. And I'm sure someone who's really into AI might text us and say, oh, no, like you're missing out. I think there are plenty of uses for businesses, whether it's writing, graphics design, whatever it may be. I think there are a ton of things, data analysis. There's a lot that you can do with it right now. But if I'm just someone who's not in the tech space, if I'm not someone who works in tech or works in a business that needs to use this kind of tech, does AI give me anything better than what I get right now? Like, no, I don't think it does. I mean, there's potential promise with, improved search results maybe.
Yeah, and we wouldn't necessarily see that. It's running, we're relying on a program anyway, so the code that's underlying that program, we wouldn't see.
You don't necessarily see that.
But I'm not noticing big improvements in the apps or the software that I use, for example. So how long will it be before we see tangible, concrete evidence of AI making any tasks
Joe Sixpack's life
easier?
better.
Joe Sixpack, yeah. Or me. Yeah, my life better. How long is it going to be, and how patient will investors be? I mean,
it might be 5 to 10 years. I'm saying this with absolutely nothing to back that up.
No, that's
but you think
as
about
good a guess as any.
You think about what the type of AI that people are excited about right now does. Generative AI. It can write, it can draw, it can do math. Like depending on the prompt that you're using in the actual model that you're using, it can do all these different things. But does the average person on their daily basis need to examine a complex data set and look for correlations in this?
No,
like,
you're right. But
they don't.
even then, you really have to. I imagine you really have to guide it to.
Like let's look at my average day when I'm not working. Just as an example, I get up. Can AI help me wake up better? Let's really break this down into little things.
Possibly a smart alarm clock would, time yours.
How would a smart alarm clock work?
Recognize that it's a Saturday, that you tend to sleep later.
But does that need AI? No, like you can do that without.
It might have to learn your patterns.
But you have that
in light of the day of the week. I don't know.
But that's
Chuck,
not. But that's
I don't know
not
what
AI.
I'm talking about. Obviously, I'm struggling here. Okay, go ahead.
If we're talking about the stuff that has people excited now,
yeah.
I mean, learning patterns. Google's Nest thermostat's been doing that for a decade.
I would call that as a form of machine. That is AI.
But it's not what we're. But that's not
No,
what.
that's
That's
not.
not what we're.
That's not why Altman's
that's
trying to
not
raise
why
$7 trillion.
everyone's excited now.
I agree.
Because that already existed.
No, I agree.
And
I agree.
like it's fine.
I agree.
So I wake up. Does generative AI help me with that? No. I walk downstairs. I make breakfast. Does it help me with that?
I mean, I suppose it could.
Does it help me do the yard work or the laundry? No. Does it help me sit down on the couch and watch TV? No. It doesn't help me do any of these things. Even let's say I'm going to work. Does it help me in terms of getting to work?
Not right now. It could. I don't want to diminish it, but I'm just not seeing the pervasive effects of technology the way we saw them. Or imagine being
I do want
around
to
in the
diminish
early
it because
okay.
I think we have to the stuff people are focused on in terms of why everyone wants to invest in AI is because of what it can produce. The stuff that it can produce is not stuff that is just useful to an average normal person going about their
So
daily
here's why
life.
I bring it up. By 1999, internet was pervasive. The benefits of the technology revolution and the telemedia aspects of it, they were pervasive. They had affected everybody's life. Stocks got way ahead of themselves. Stocks are arguably ahead of themselves today, not quite as far ahead of themselves. But in light of the fact that we see no evidence of AI permeating our everyday lives, personal or professional, I wonder if there's even more, if there's a case, despite the fact that valuations are not today where they were then, that things might be even more frothy today. At least it was plausible then. We were all ordering online.
Right.
I could give a million examples. Everybody here knows them. Your life was different in 1999 than it was in 1992. It's true for everybody. How is our life different now, say 2 years into the AI so-called revolution, than it was then? How will it be different in 5 years?
In the business world, it's very different.
Okay, I'm just sheltered.
Because I think that there are all kinds of people that if you are not actively using AI as part of your job, you're going to be AI'd out. If you are a graphics designer who's not playing around with AI, you got a shelf life. If you're a copywriter who's not playing around with AI, you got a shelf life.
Mm-hmm.
And these are the places where when we talk about, again, how can companies rein in cost, and does that either improve margin or, bring down prices because they can cut headcount and things like that? There's something there on that side. And it's only going to expand as we learn how to use it for more things
Maybe
in the
I'm
business
just jumping
sense.
the gun. It's just too early. It'll be pervasive in 5 years like the internet became.
On the personal side of things, the stuff that we're doing with AI, I don't know that it's going to ever be something that's life-changing for just an average person on a daily basis, other than maybe it makes the services that they use cheaper because companies can cut headcount. And maybe that's where they see it. Let's take a quick break for the rest of the day, but we'll be back tomorrow on the Financial Exchange. We'll see you then.